Welcome back to the cryptowrld channel, everyone. My name is Josh, and today the S&P 500 index officially entered into bear market territory. So I'll be talking more about that later in the video, alongside a brand new Bitcoin signal that has only happened just 2 other times in Bitcoin's entire price history. But first, starting off on the daily Bitcoin chart, and at the time of recording this video, the Bitcoin price is trading slightly below this range of support, coming into play at around $29,000 to $30,000 per Bitcoin. But considering the fact that we've actually seen a couple daily candle closes slightly below 29,000, and we've still experienced a decent bounce in the shorter term, which shows us we do have some support slightly below 29,000 as well, what we need to do is simply readjust this range of support on the chart down to 28,500, considering the fact that we've seen a daily candle close at around 28,500, and we still experienced a bounce in the Bitcoin price from that level. And so while the Bitcoin price is maintaining this range of support, I'd simply expect more sideways choppy price action, because if we're zooming out to the 2-day Bitcoin chart, like I said yesterday, we technically have a bullish divergence forming here with a lower low in the price but a higher low in the 2-day Bitcoin RSI. And the last significant bullish divergence we've seen on the 2-day Bitcoin chart was back during the middle of last year. But just something important to keep in mind, as this bullish divergence was forming in the middle of last year, even though we saw reduced bearish momentum like what a bullish divergence suggests, we still experienced a slight downtrend in the Bitcoin price if you're looking at the overall Bitcoin price action. But if you're looking at the lows, we didn't really form lower lows this entire time. We saw one lower low as this bullish divergence was forming, but that low was only about $1,000 lower than the initial low that we formed back in May. And so simply based on a number of different factors that I've been talking about recently on the channel, I'm expecting mostly sideways choppy price action in some sort of price range. But keep in mind, we could still experience a slight lower low, for example, like what we saw in the middle of last year. But basically what I'm saying is I'm not expecting any significant move in the Bitcoin price like this or like this anytime soon. But whether you like them or not, price ranges are actually good for Bitcoin for 2 reasons. First of all, generally speaking, they can provide some great accumulation ranges to accumulate some Bitcoin. And also, if the Bitcoin price is in a very clear range between support and resistance, that is actually a great range to be trading Bitcoin. For example, shorting Bitcoin at resistance and then longing Bitcoin at support. And then that can be another way to accumulate even more Bitcoin or more stable coins, even while the Bitcoin price is just chopping around somewhat sideways. But with that being said, I don't recommend leverage trading for complete beginners out there, because trading the swings in the Bitcoin price is mainly for those who know how to manage risk and for those who know how the Bitcoin price generally moves. And just quickly zooming out to the weekly Bitcoin chart to give you a quick update on these moving averages, because right now the Bitcoin price is very close to entering back into this price range, which is currently coming in between 28.1k and 22k based on the 1,000-day moving average and the 200-week moving average. And in case you were new to this channel, the reason why I'm talking about these 2 moving averages is if you simply look at Bitcoin's entire price history, pretty much every single time where the Bitcoin price enters between these moving averages, that gives us an exceptional buying opportunity, especially if you're holding for the longer term. And this also goes hand in hand with the weekly Bitcoin RSI, which is getting very close to oversold territories at the time of recording this video. In fact, right now the weekly Bitcoin RSI is sitting at around 33, and oversold is anything below 30. And what is really interesting is we've only ever seen the weekly Bitcoin RSI enter into oversold territories just 2 other times in Bitcoin's entire price history. And speaking about something that has only happened just 2 other times in Bitcoin's entire price history, taking a look at the monthly Bitcoin charts, specifically at the monthly Bitcoin RSI, because the level it's sitting at right now has only ever been reached just 2 other times in Bitcoin's entire price history, which were at the end of the 2018 bear market and the end of the 2014 bear market. And you can see that right now the monthly Bitcoin RSI is currently lower than the bottom of the March 2020 crash, which was a massive crash in the Bitcoin price. So this right here is actually an extremely rare opportunity that once again we've only seen just 2 other times in Bitcoin's 13 years worth of history. So whether or not you think the Bitcoin price has already bottomed or it still has lower to go, personally I am taking advantage of this rare opportunity that we don't see very often by accumulating just some Bitcoin by dollar cost averaging as usual. And as I've said time and time again, as the Bitcoin price enters into this price range, basically below 28,000, and especially if we get anywhere close to the 200-week moving average at around 22,000, then at those lower price prices, personally, I would simply just buy more Bitcoin on top of my regular dollar cost averaging. But something else to think about now is the fact that the S&P 500 index, which is here on the weekly time frame, has just officially entered into bear market territory today. Because the official definition of a bear market, at least in the stock market, is when the price of securities, so the price of stocks, basically fall by 20% or more from recent highs amid widespread pessimism and negative investor sentiment, which obviously sounds like the market today. But technically, the S&P 500 index, for example, isn't officially in a bear market until we see a decline of 20% or more, and that's when it becomes an official bear market by definition. And with the red day that we've seen today in the S&P 500 index, from the all-time high to the lowest point right now, that's been a decline of nearly 21%, which means this is now officially a bear market by definition. And so now that this is the case, what should we expect moving forward? And first of all, it's very obvious that every bear market is going to be different from each other. We're not going to have the exact same bear markets to the last bear market, for example, but simply looking at a few previous bear markets to get some sort of an idea of what could happen. The last bear market that we saw in the S&P 500 index happened during the 2020 crash, because that right there was a decline in the S&P 500 index of around 35%, putting it in bear market territory. And that bear market only lasted for a little over 1 month, which is actually one of the shortest bear markets we've seen in the stock market in history. But it still brought the weekly RSI down into oversold territories, which was giving us a pretty good buy signal at that stage. And the bear market before 2020 was what we saw in 2018, because if you're measuring from the high down to the low, that was a decline of a little over 20%. So basically, as soon as that decline in the S&P 500 index became an official bear market by definition, because we just saw the 20% decline, that basically happened at the same time as the S&P 500 index actually bottomed out. And if you're looking at the amount of time it took for that bear market to actually play out before we bottomed out in the stock market, that was around 100 days approximately, so pretty much around 3 months. And once again, at that bear market bottom, we saw the weekly RSI get down towards oversold territories, which also gave us a pretty good buy signal at that stage. But once again, as I said earlier, not every single bear market is going to play out the exact same. And what is really interesting about these two previous bear markets we've seen in the S&P 500 index is the fact that we also experienced a massive Bitcoin crash during March 2020 while the stock market was crashing. And we also obviously experienced a bear market during 2018 in the Bitcoin price as well as the stock market. And obviously the longer term subscribers would already know this, but I've basically been saying this sort of stuff for over a year now on the channel, basically just talking about the correlation between the stock market and the Bitcoin price. Because in case you don't already know, yes, the stock market and the Bitcoin price are correlated at least most of the time. So basically we need to see some sort of bottom form in the stock market and a decent bounce back towards the upside before expecting more bullish price action. I mean, a lot more bullish price action in the Bitcoin price. Otherwise, we shouldn't really be expecting a lot of bullish price action in the Bitcoin price while the stock market is still playing out a bear market. But whether or not prices are going up or down, there's still ways to make money in crypto, like trading or earning interest. And if you want to know exactly how to do that, then these two videos popping up right here on your screen are definitely for you to watch, because I've got a trading tutorial video in the top left and a passive income video in the bottom left. But anyway, that is it for this update. I really hope you enjoyed, and I'll see you all in the next video.